trading's just gambling, right? You just put your money in, see what happens, leave it be. If I lose, I lose. If I win, I win. I have no control over anything. Today in this video, I want to debunk that myth and hopefully not convince or try to sway anybody that has their strong opinion. They're like, let me just see what this guy has to say about trading, because I'm standing firm in my belief that I'm not messing with the stock market. I'm not messing with trading. I'm not putting my money in anywhere that I don't have my tangible hands on, right? If you are a trader or you do invest in the stock market long term and you see the value, comment down below. Let me know your opinions. Either you are believing that trading or stocks or is gambling, or you're a firm believer that it is a skill set. Let me know which side of the coin you're on. So in today's videos, what I want to do is kind of give you both definitions and both sides, and also how we have maybe swayed or convinced by the value that we provide in our Discord, and also just by our education in this video, how trading is a true skill set and you can make it a money generating machine from your phone, laptop, desktop, from anywhere in the world. All right, so let's get into it. Make sure you hit that like, subscribe button, comment down below which side of the coin you're on. Let's jump into it. All right, so I made this here if you want to screenshot it, if you want to take notes as well. The way I kind of had this debate or battle is, let's start off with the definition of everything. Okay. And right now we're talking about gambling versus trading. So gambling is when a person bets or risks something of value, like money, based on a chance outcome that is out of their control or influence, with the understanding that they will either gain increased value or lose their original value determined by this specific outcome. So key things that I want you to pay attention to there, and you can debate all you want that pretty much anything's a gamble. Right now, I could say that I went up through the traditional route of following the rules, going to college, then going to graduate school, and then getting the job and doing all those things. And now being a full-time entrepreneur for the past 8 years, going on 9 now, it seems like college may be a gamble, right? The job you took may be of a gamble. Maybe you took a chance not knowing the outcome of things and you moved across country, or maybe your relationship was a gamble for some people, right? You took a chance, right? So I'm putting some far-fetched ideas out there that the mindset and the psychology is based off of these key terms: the chance outcome that is out of your control. Now, many of you, when you clicked on this, you saw gambling as I go to the casino, right? I'm here in Vegas. So if I go to the casino, put money on red, put money on black, right? I really don't have, I have an odds, right, of winning, but I have no control. I have odds of winning, but I really have no control, right? And that's really what I want to make, that many people believe, that you have no control over the stock market and your money that's inside, when you really do. If I put money on black, I either win or I lose it all. That is not how trading works. That is not how the stock market works. You have control to have your risk set and get out of a position if it goes against you, okay? You can have a 10% loss. You can have a 20% loss. You can have a 5% stop loss, as it's called, right? And you have risk parameters that you can control based off your emotions and your risk tolerance. Now let's go into trading here. Trading refers to the buying and or selling of shares or potential options contracts of ownership in a company, with the goal of profiting from a price fluctuation, often done through a brokerage account or stock exchange. So I am buying something of value, a company, and I decide to sell it on a profit. Well, Brian, who knows? These companies are manipulative, and they drop the stock price and then they rise the stock price, and you don't know where it's going. Actually, we do, and I'll show you my key where the money's made. If you've heard the terminology, the money's on the charts. Comment down below, the money's on the charts. Okay. This is where the money's really made. If you're listening to the news and you're only looking at fundamental analysis, right? Meaning the opinions and the fear and the greed and your emotions and the psychology is getting in the way, and you're only looking at, man, this can't go any lower. Oh, this is the bottom. Oh, we're not going into a recession. Oh, this is, all these opinion-based things with no analysis on the technical side. Okay, let's jump back into it. So I have control, the research, the strategy, and risk management. So I have control based off of the historical context that I have from what a company's done in the past. I also have historical context of how the stock price is moving on the charts based on what it did at that price level last time and where it's going to the next level. So I can see where buyers and sellers are if I want to buy the stock where many buyers are, or do I want to sell the stock when I see it breaking certain key levels. That is a strategic skill set, just like anything else in business. I spend money, maybe no customers buy my product. That's a risk that you're willing to take, but you had a strategy, you had a plan, and hopefully you had some risk management. So if you poured all your money into a business and no one shows up to the doors to buy any of your products, now what? Is that not the same thing as the stock market? Right? So let's go into the key differences. Skill versus luck. Okay. In trading, you analyze data, trends, and strategies. In gambling, it's mostly about chance, the odds. There's really not odds when it comes to the stock market and the direction that it's going, because there is data, there's trends that we follow, and there are strategies and tactics. And on the charts, we have what we call high probability setups. We have strategic patterns that we can follow: bull flags, bear flags, double tops. All this is sound like gibberish. Let me take a brief moment. Click that link down below, join Leverage University, or type leverage or DM me leverage, and we'll send you some more information about how you can join our Discord. And beginners coming from all walks of life, busy professionals, and they're learning this within a very, very short amount of time and understanding it and saying, wow, I had a belief that this was gambling too, and now I see the light. Okay. So we've got data and analyze. We've got risk management. Traders manage risk with strategies. Gamblers often make reckless decisions without any control. So if I go to the casino down the road, put $100 in, there's a chance, there's odds. I have no randomness control over what's going on in that machine, what's really going on the table. I have risks. Now, certain games, for those that are bettors out there, or those of you that gamble in the casinos or maybe sports betting, things like that, there are certain levels. I get it, right? There are certain things where you have odds that are in your favor, and there's certain patterns that you follow on the poker table, right? But I'm talking about the randomness selection of just throwing money and closing your eyes and saying, please, 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 please win, right? That's a difference. And that's how most people treat the stock market. Let me just throw some money in here, see what it does. No strategy, no stop losses, just buying wherever. I don't know when to take it out. It's losing. Let me panic sell, all those things. Okay. Long-term versus instant gratification. That's typically somewhat of a gambler's mindset, is that if you jump into the stock market thinking, I need to win now, I need to win now, I need to win now, without learning the skill set, that is a gambler's mentality coming in. And that's what you may see from some people, maybe even yourself, no judgment, where you've tried the trading, you've tried the stock market, you've lost some money, you've tried to learn from somebody. This don't make no sense. It's not the person teaching a lot of times if they are telling you, set a stop loss, risk management, stop out, take your 15% profit. No, I want more. Can't control that. Unfortunately, can't control that. So the minute that the person begins to learn that, which we all have, myself included, and you still will make these mistakes, that's okay. But the minute you start learning that, okay, I have control, and this is a skill. What's my strategy? What's my risk? What's my position size that I want to put into the trade, or the stocks that I want to purchase long-term? How long am I holding them? Is it a 2-year hold, 5-year hold, 10-year hold? Am I passing down to my kids? That's how you approach the markets. That's when your psychology shifts, that this is not gambling. Okay. Now, there is some luck involved. Like right now, at the time of this recording, right? The drasticness of the drop, right, of this level, right? This used to be support where buyers are sitting. Buyers bounced, went up, right? They bought the SPY S&P 500, bounced, went up, right? Tried right here, bounced, went up, and you see that that level of support broke through. So now if someone held puts or sold the stock and made money coming down, right, now they are winning the drasticness of that drop, right? Let me show you something for my seasoned folks out there. What is this? We called it in our Discord. It's a head and shoulders formation. You're like, a head and who? A head and shoulders. So when you see a trader or an investor start, really showing you patterns that repeat themselves and you start recognizing those patterns, right? Let me show you another one. All right. Big move down. Big move down right here. Big move down. For my folks that know, what is this? That is a bear flag. Bear flag completes the move, and there's a pattern. So when you start understanding and really say, okay, I'm committing to learning this skill set. If you're not committed to learning it, stay out of the way. Keep your opinions over there. That is your prerogative. That is cool. All right. Some real estate professionals out there might be having their opinions or might have some opinions as well. Well, you can also say that there's a risk involved too. Right? What if there's no buyers? It's not a buyer season. So there's not a right or a wrong. It's just finally seeing the light of, okay, it is a skill set. It is something that someone can make money from. There are strategies. There is risk management. I'm just not willing to do it. That's what you should leave with if you stay strong with that opinion. But if you're curious and you're like, how do I see these people winning? How'd they know it was going to drop? No one knows it's going to drop right there. Actually, we had a strategy. It was a bear flag. We were coming into fearful news, and we signaled, and we had a strategy and a plan in our day trade signals. And I gave the strategy right here on that Apple drop, which was right here. Apple watching the puts, meaning put down the phone. You can make money right there. Right. And then there's a resistance. Patterns. Couldn't get above 225. Couldn't get above 225. Couldn't get above 225. And I saw weakness again as the stock price was moving up into 225. And we had a strategy for that level. And guess what it actually did? Where's Apple? Look at that. 225 right there on that bear flag. Same thing happened on Amazon. Bear flag couldn't get above this 205, 206, and then right there as well. And our community banked on those, as well as other communities, other people that you're seeing out here that are winning. And if you won on these downside moves, great. If I'm still having some unbelievers out there, some non-believers, I should say, right, that is okay. Just be curious. How did David make $600 and he only spent $95 on the contract overnight, woke up to $600 plus? Right? How did Lloyd spend $41 and then wake up in the morning and closed out $400 of profit? Do you have 41 bucks to turn into 400? That's one contract. What if you had three? $120 into $1,200 profit that you can move into your bank account tomorrow. These profits are now in their bank account that they can go take their family out, spend money on, all those things. Right? We had more wins. We had some shy folks that didn't want to share, but we have more wins. Shout out to Megan. Shout out to James. Right? These are things that are strategic. And it's not just in Leverage University. It's not just in our community. It's all around. There's silent investors. There's silent traders that don't speak up. And that's okay. But we want everyone to be aware of what's going on. It's not the only thing I do, but what if you had this as a skill set on the side? These are full-time professionals. They got jobs. They got other things going on. Right? So in summary, okay, we've got these things, and the trader's mindset develops discipline using facts and analysis, not emotions. Emotions we control. They do come up. We get greedy. We get fearful. Gambler's mindset is just, I'm going to just make decisions based off my emotions. I'm going to see if this goes up. I'm going to see if this goes down. I believe Tesla is going back up. Why? Why would you believe Tesla is going back up? Give me some strategies on why you think Tesla is going back up when their delivery numbers are awful. Well, Elon, blah, blah. That's your emotions and opinions. Give me a rational reason why this is going down into a bear flag. I see resistance stepping up. Okay. I've got another leg down here, and I've got some gaps to fill down there to the bottom. If you're like, what in the world is he talking about? That's why it's a strategy and a skill set. Okay. So when a trader or an investor is in the markets consistently and is saying, hey, I'm not buying Tesla until it gets below 150, or below 180 again. They're like, it's never going to get down there. You're saying Tesla's going to drop another? Yeah. That is my strategy. That is my analysis. But you also have another analysis. So we react, we don't guess. So guess what? If it does break back above 290 and 300 and we get moving, cool. I know exactly where it's trying to head, back up to the upside to touch 400 again, but doesn't mean that it can't just drop again. You know why? Because it did it last time. Went from 400 back to 230, back to 400, all the way back down to 100. So we're just trading trends and reacting off of those trends until the trend decides to tell us otherwise. Okay. As investors in the stock market, as traders, if you day trade, swing trade, all those things. Okay. Now I'll leave you with something fun, right? We want this to be fun. We don't want it to be serious. I'll round you out with this. You will hear the term lotto. I use that term in my community. You'll hear it with experienced traders or just people in general. It's like, I'm going to treat this as a lotto, Lotto. Now, some people might be like, yo, that's a gambler's word, lotto, right? That's when you have a strong conviction that something might happen and the risk is worth the reward. So if I believe that the market's going to drop further, and just say, let's use this example of Tesla, okay? And I decide to trade Tesla and I'm going to take a lotto trade on it, right? I would look and say, man, I think Tesla can drop down to 200. By when, right? I'm going to be strategic and say, maybe it'll take a couple of months for that to actually play out, but I'm willing to take the risk. I'll have my stop loss on, okay? But my stop is going to be wider, meaning I'm willing to risk more. My stop loss will be wider. So I might come out to June and I might go to the options chain, the options contracts. Okay. Let's just say April 17th, a couple of weeks out, and be mindful. I'm not doing this. I'm just showing you that this is how I would formulate an idea. And I will come all the way down here to the 200 puts. Okay. 200 puts, which is right here. And I see that there's 28,000 of interest on those puts, which is interesting. That means other folks are having that contract actively bought or watching that contract, and there's contracts being built on that 200 put. It's $121. Okay. So that is a strategic, as we call lotto, is it's significantly away from where it is now for Tesla to drop another $60, but the risk potentially is worth the reward. So if I spend $100 and just say something crazy happens again and Tesla drops another $60, well, that $100 will turn into probably close to $1,000, $2,000. Okay. Based on when it does it. Okay. Here's how those contracts look with strategic lottos, those contracts that I signaled in our community, those 222.5s. It was $100, right? You saw me. Right here. $100. Trading floor, day trade signals. Right here. I even gave the price point of how much it would cost. Apple, 220 puts, expiration 4/4. Contract prices should be around $100 to $125. Okay. Stop loss. I always tell my community, stop loss above 226, resistance at 225. And it did exactly that. And those 220s are now $1,700. Spend 100. We didn't know it was going to drastically drop this much. My target was down to 220. So drop $5, but you swung it overnight, meaning you carried that contract overnight, and it turned that $100 into $1,700. Right? So it was a strategy paired with execution, paired with risk management, paired with potentially it could go nuts. 300-400%, 1,000% on those contracts on your money. All right. So I love each and every one of you. If you're new here, if you clicked on this video, thank you so much for watching. Hopefully this got you excited and curious about the stock market in general, from buying shares to also trading options or trading futures and understanding like what this whole skill set is about. All right. If you have an opinion, you're still not about it, that is cool too. I just want to bring this video to you to debunk the myths, and maybe some of y'all can send it to your friends and say, hey, here's how it actually works, from fundamentals, the news, the earnings, the data reports that are coming out, inflation reports, how the economy is doing, to the analysis on the charts, and you pair those two together and you have a strategy and you have execution of what you want to do. All right. Peace, love, and blessings. I'll see you all in the next one. Let me know down below what you think. Bye.